It is 9:17 a.m. Pacific Standard Time. It is what? It's the 18th of November, 2025, and this is episode 1213 of Bitcoin. And we're going to run down south first to El Salvador. That's where the news that you can use begins this morning. But then we're really going to need to look at Kindly MD again. I was talking about the whole David Bailey, Brandon Green switch up at BTC Inc., which is the parent company of Bitcoin Magazine. And, David Bailey got himself into that whole issue with Kindly MD and Nakamoto, and I talked all about this yesterday. But now Kindly MD is back in the news. So we're going to talk about that. Cloudflare has been causing all manner of problems this morning. In fact, it wasn't even allowing me to get to my own podcast host website, which would be podhome.fm. I love those guys. It's a great service. If you've got a podcast and you're not liking your host, you might want to consider podhome.fm, but I couldn't even get over there because Cloudflare was all jacked up. And by the way, it ain't just me that was having problems. We got some crypto that got crippled because, centralization. Then the White House considers joining some kind of weird international tax plan. Then we're going to run back down south, back to El Salvador, where something else is going on, which is kind of interesting. It's tasty. It'll be a tasty, tasty treat. Tether is making yet another investment. I'm telling you guys, this is a company that just seems to be on fire, but it seems like it's just going unnoticed. I notice it. It's not because I'm a fan or if, this isn't a fan favorite of mine. I just can't not see these rather large moves that this company that started out by building a stable coin so that degen traders didn't have to go into USD on crypto exchanges could use, but it is very clear to me that they have their design set on something a hell of a lot larger than just being a stable coin provider. Then Mt. Gox. Of all the times to move Bitcoin, yesterday was not one of them, especially when you're not going to do dick with it. I wonder why they did that. And then let's see what else we got. Good Lord, I can't even see this. What the hell's going on? Oh yeah. Today I will end up with in this show talking just a little bit about what's going on with Bitcoin, because clearly, unless you're living under a rock, shit's going on with Bitcoin. But first, El Salvador and their latest $100 million Bitcoin haul. It's rekindled questions around that IMF program. That would be the International Monetary Fund. Adrian Zmunsky from Cointelegraph is going to get into some detail here. El Salvador, the first country to adopt Bitcoin as legal tender, says that it has bought more than $100 million in Bitcoin despite pledging, swearing, hand over heart to the International Monetary Fund to limit public exposure to the asset as part of a loan agreement. So, according to data from El Salvador's Bitcoin office, the government acquired 1,090 Bitcoin worth more than $100 million on Tuesday. Taco Tuesday. The purchase comes after the IMF said in a July report that the Central American nation had not bought any new Bitcoin since the organization approved a $1.4 billion loan program at the end of 2024. According to El Salvador's Bitcoin reserve data, the country's Bitcoin holdings went from 5,968 BTC on December the 18th of last year, when the government inked the deal with the IMF, to over 7,474 Bitcoin following its latest purchase announcement. El Salvador's reserves were valued at roughly $683 million at the time of writing. Despite Bitcoin losing ground after falling 28% from the all-time high of over 126,000 in early October, to $96,000 at the time of writing. And well, okay, we won't talk about it. Shh, it'll be okay. The move follows comments in July from Quentin Ennerman, general manager at My First Bitcoin, a non-governmental organization focused on Bitcoin adoption, who said that El Salvador's Bitcoin reserve had a limited impact on the broader population. He said that since the government entered into this contract with the IMF, Bitcoin is no longer legal tender, and we haven't seen any other effort to educate people. Quote, the government, apparently, continues to accumulate Bitcoin, which is beneficial to the government. It's not directly good for the people, end quote. The IMF and the Salvadoran government did not respond for requests for comment. Data from El Salvador's Bitcoin office appears to show that the government has continued to accumulate BTC since signing the IMF agreement. The IMF also requested that the country restrict Bitcoin purchases in early March in accordance with terms of the previous loan agreement. Still, a letter of intent signed by El Salvador Central Bank President and Minister of Finance, quoted in the aforementioned July IMF report, claims that the Central American country bought no Bitcoin since the 2024 loan. So the IMF report explained that Chivo, the wallet, does not adjust its Bitcoin reserves to reflect changes in clients' Bitcoin deposits, which led to minor discrepancies that made it appear that El Salvador's public sector was accumulating BTC. Oh, bullshit. That is bullshit. Wow, talk about reaching for straws. My God, the IMF just pull up your big girl panties. Holy crap. The letter, signed by Salvadoran officials, further stated that in line with commitments under the program, the stock of Bitcoin held by the public sector remains unchanged. It also promised that steps to reduce exposure are being taken. Quote, we are taking steps to mitigate financial risks by reducing the public sector's role in the Chivo wallet and reframing the Bitcoin project, end quote. Those assurances came before the latest and unusually large Bitcoin purchase. Even so, the government has continued to at least suggest it was steadily accumulating Bitcoin before this week's buy, raising fresh questions over just how closely it is adhering to the IMF deal and how its Bitcoin reserves are being reported. That's the end of the article. It makes me wonder, ladies and gentlemen, is it possible that let's say that this is true, there's proof positive, no questions remaining that El Salvador did in fact purchase $100 million worth of Bitcoin sometime early this morning or late yesterday, whenever it was. Let's say it's true. Let's further conjecture that they have consistently been buying Bitcoin ever since the IMF loan deal was made back in 2024. Let's further review the fact that, well, the IMF has sent several letters to El Salvador. They've made several statements that El Salvador is required to do this thing and they really don't like Bitcoin. That shit we know is true. There's no doubt about that at all. There's not even a hint of problems in understanding that one. So, taken all together, is it possible that Bukele is playing with the IMF on the national stage only to leave them with a bunch of egg on their face, which would, I'm sorry, it would make the IMF look much weaker in the eyes of all the nations of the world if something as small as El Salvador can thumb their nose at the IMF, bring them to the table, waste their time signing an agreement, never under any circumstances for one freaking second, not 1 nanosecond, having any attention to honor any part of that deal. Think about that. What exactly would happen if through all these, public embarrassments, and again, we have to assume, or rather, we're conjecturing that what we know about this purchase and the other purchases of Bitcoin by El Salvador is true. We don't know, right? There's some opaqueness there, right? So none of us really actually know. We have some ancillary evidence. We have, wallet addresses that seem to be linked to El Salvador, but we don't really 100% know, which is problematic. But we are making the assumption here for purposes of argument that they have done all this, that we do know. And let's say they just carry this out and they just go on and on and on, and they continuously buy Bitcoin, and their IMF is continuously writing them letters essentially to say, please stop embarrassing us. And then finally, Bukele just stands up and says, you know what? You can take your loan and you can shove it. We've been buying Bitcoin this entire time. You look like buffoons. Honestly, at that point, the reputation of the International Monetary Fund takes a hit. I don't really care who, well, it's just El Salvador. Yeah. Well, when one of the most unpopulated countries in the world, or at least one of the lowest population countries in the world, because of their size, it is a tiny, tiny country. I could probably fit 5,000 El Salvadors inside of the state of Texas. Not exactly sure about that. So, if you do the math and I'm fundamentally wrong, give me a break. I'm just saying, this is one of the smallest countries in the world. And if they can do it, if they have literally no shame in just making the IMF look like the morons that they are, then what does that do to their reputation on the national stage? I think it takes a hit. And I for one, am hoping for exactly this. I hope they're buying Bitcoin, and I hope they have every intention of coming out of the closet saying, all this time we've been basically thumbing our nose at you. I would laugh my ever-loving ass off. But some other people that, they're not laughing. And it ain't the IMF. It's, anybody who's tied up with Kindly MD. The Bitcoin treasury company has extended stock collapse after they delayed their earnings report. Dude, that is something you do not do. And when you do it, chances are good it's not an internal snafu. You didn't forget. This is something that is extremely problematic going on inside Kindly MD, aka Nakamoto, or whatever the hell you want to call it. Let's find out more from Stacey Jones at decrypt.co. Bitcoin treasury company Kindly MD's share price dropped nearly 10% Monday, after the firm said on Friday that it won't be able to meet the deadline for its third quarter earnings without unreasonable effort or expense. Okay, let's just pause right there. Unreasonable effort or expense. You're putting together an earnings report. These numbers should have been at your beck and call throughout most of the quarter. The numbers should be compiled at least on a weekly basis by your chief financial officer's crew. That's the way shit like this works. It's not hard. It's not hard to do this unless you act like you're in high school and you've got a term paper coming up and you wait until the day before it's due to actually start writing the paper, and you realize just how much effort and expense is going to have to go into it. This does not look good. From a leadership level, this looks like something that might be run by kindergartners. I'm not sure. Continuing on, the company's shares, which trade on the NASDAQ under the NAKA ticker, NAKA, had fallen to a mere 55 cents. By the end of the trading day, NAKA is down 25% from a week ago and more than 95% lower than it was just 6 months ago. Large companies file within 40 days after the end of the quarter. All other U.S. publicly traded companies, including Kindly MD, have 45 days to file after the end of the quarter. For the third quarter, which ended September 30th, that cutoff was November the 14th. But instead of its Q10 or 10Q, Kindly MD filed paperwork with the United States Securities and Exchange Commission on Friday to say that the complexity of accounting related to its merger with Nakamoto has, quote, necessitated additional time to ensure the accuracy and completeness of the information, end quote. Oh, they're pulling that one out of the bag. Okay, well, it is mergers are complicated. I get it. Still, though, you knew the deadline. You knew when the deadline was coming up. All right, that should have been assigned to at least a couple of people. Hey, you guys need to make sure that we've got numbers. Anyway, Kindly MD merged earlier this year with Nakamoto, a Bitcoin treasury firm formerly known as Nakamoto Games. Oh, I did not know that part. Oh, interesting. As part of the merger, Nakamoto founder David Bailey was named CEO in August. Bailey has remained on Twitter or remarked on Twitter about a new CEO taking over at BTC Inc., which he co-founded, but has not directly commented on the company's share price or late quarterly earnings. The firm did signal in its filing that its numbers will show a significant change compared to this time next year. Yeah, I'll bet. NAKA said it expects to report a realized loss of $1.4 million on digital assets, meaning that it has sold some of them. There will also be an unrealized loss of more than $22 million on digital assets that it still holds, and a $14.4 million loss on extinguishment of debt. The filing also says the company will report a $59 million loss on its acquisition of Nakamoto, meaning that it paid more to acquire the company than the fair value of net assets received. Buy high, sell low. Hey, whatever. But the company also said it expects to report a $21.8 million positive change in the fair value of contingent liability. That means one of the company's liabilities has been marked down in value, which shows up in earnings as a gain. This is a dumpster fire. This Kindly MD Nakamoto thing is a dumpster fire, and you would do well to stay as far away from it. And honestly, most Bitcoin treasury companies, in fact, all of them. I mean, even Strategy. I need to see Strategy making more products and selling more products before I even entertain the thought of looking in the direction of the possibility of buying at least one share of that company, which I probably will never do. It's just not worth it to me. Everything dumped. When you've tied your entire future to a single asset, and I love Bitcoin. This is the Bitcoin and podcast, but still, if you have no revenue, if you're not offering a service for sale, and you've tied the entire company to this one asset, even if you've got some shit coins in reserve, you're still tying yourself to Bitcoin in toto. What do you expect to happen when the price of Bitcoin goes down? What did you think was going to happen? And the fact is, they've sold some. That's not going to look good in the news, but we knew that was going to happen. I'm still trying to figure out, though, how it ended up being Nakamoto that was the main pressure release valve for the pressure building up in the bubble that was or is Bitcoin treasury companies. I mean, yes, Metaplanet's lost and Strategy stock prices down below 200. I get all that. But as far as just blowing your top off, dude, it's Nakamoto in this Kindly MD mess. 95% down. Next time, find a widget to sell to people. I don't know. And then there's Cloudflare. The global network outage, yeah, Cloudflare was down globally, hits multiple crypto front ends and widespread disruption. James Hunt writing for theblock.co. Cloudflare suffered a global network outage on Tuesday that has impacted the front ends of multiple crypto platforms, including exchanges, block explorers, DeFi protocols, as well as analytics services. Cloudflare provides global network infrastructure powering security, traffic routing, and edge computing services used by millions of websites and applications. Coinbase and Kraken, of course, are among the crypto exchanges impacted by the issue, with Blockchain Explorer, Etherscan, lending platform Aave, and data provider DeFi Llama all experiencing intermittent Cloudflare 500 internal server error pages. The issue is also impacting major Web 2 sites, including Twitter, or, well, X, whatever. Cloudflare first acknowledged the issue on its status page at around 11:48 a.m. UTC, describing it as an internal service degradation affecting parts of its global network. The company said the issue had been identified and that a fix was being implemented. The outage comes amid scheduled maintenance at several Cloudflare data centers, although the firm has not confirmed whether the two events are connected. Of course they're connected. Y'all performed multiple server migrations all at once, and you just expected everything to go swimmingly? Okay. So anyway, Cloudflare really screwed the pooch this morning. I mean, there's more to this article, but all we really need to know is that Cloudflare went down, and when it does, it always exposes who's swimming without underwear insofar as all these people that claim that they're decentralized. No, they're not. You know who didn't go down? Bitcoin. That's right. Bitcoin did not go down. Bitcoin does not rely on Cloudflare. Are there some wallets? Are there some companies that use Bitcoin and build themselves out as Bitcoin companies that were affected? Of course. But the Bitcoin network itself, it's nothing happened at all. Blocks flowed, transactions got confirmed. Dude, it's just fine. But when this happens and you see who's swimming without swimming trunks, you should remember their names. Okay. Sats4snacks.com. That's sats4snacks.com. Go and visit my friend Permanerd at sats4snacks.com. That's sats, the number 4, snacks.com, and get yourself some freeze-dried pineapple. He sells them in 5-packs for 44,000 sats. Sats, you say? Yes, I did say sats because this is the Circle P. It's where I bring plebs with goods and services for sale in Bitcoin to you, plebs who might want to buy said goods and services in Bitcoin, because if you're not selling into Bitcoin, you ain't in the Circle P. And Permanerd is definitely one of the spotlight vendors in the Circle P. Sats for snacks, you can get freeze-dried pineapple, freeze-dried peaches, freeze-dried mango. You can get freeze-dried sweet stack medley packs, which got mangoes and dried strawberries, dried pineapple and dried peaches. And we're talking freeze-dried, not dehydrated. There's a difference. Some of these fruits, when you dehydrate them, they call it fruit leather for a reason. It ain't so pleasant. But freeze-drying this stuff, that changes the texture completely. And for 44,000 Satoshis, you can get 5-packs of all of these things, including 5-packs of freeze-dried bananas, which are freaking fabulous, man. But he's also got proof of healing Comfrey Salve. It's not a fruit. It's not freeze-dried. It's a salve. You put it on cuts and bruises and scrapes and, like bee stings and things like that. And it really accelerates the healing process. Don't use it on really deep cuts. Like if you think, man, I should probably go to the hospital. No, I'll just put some Comfrey on it. No. Don't do that shit. If you think you got to cut deep enough to go to the hospital, then go to the hospital. Let them sew your ass up and then treat the wound after a couple of days of healing with salve, with Comfrey, and get your Comfrey salve from sats4snacks.com. That's sats4snacks.com. Make sure that you use the code Bitcoin and in the coupon code get 2.1% off of your entire purchase. And it also lets Permanerd that I made a sale for him here on the Bitcoin and podcast. And he will be able to get me back on the other side with what he thinks that sale was worth to him. It's the only podcast with value for value advertising anywhere in the world. It's the Circle P. On to the White House, who, for whatever reason, is considering joining the CARF, possible new tax rules for foreign crypto accounts. They want to know. They want to make sure that they can find every single piece of value you own, because government's only intention ever is to steal from their citizenry, tell them that they're giving them services for it, and then not provide good service. It's like the antithesis of capitalism. Anyway, the White House is reviewing a proposal from the Internal Revenue Service that would mark a shift in how digital assets are taxed and reported in the United States of America. The initiative involves adopting the CARF, or Crypto Asset Reporting Framework, which is a global tax standard that would grant the United States Tax Agency full access to data related to foreign accounts held by American citizens. The proposal, titled Broker Digital Transaction Reporting, are submitted to the White House on November the 14th, and it would align with the U.S. tax system with that of 72 other countries that have already committed to implementing the CARF by the year 2028. Although the IRS has not classified the measure as economically significant, then why are you doing it? Its introduction would nonetheless require American taxpayers to adopt stricter standards even when reporting capital gains generated on foreign platforms. The CARF is an initiative of the Organization for Economic Cooperation and Development, launched at the end of 2022. Keep that year in mind. This is brand new shit. This is brand new globalist crap that I'll bet most people have already forgotten about. God knows I did. 2022 was the installation of the Organization for Economic Cooperation and Development. It started, or with a stated objective of facilitating the sharing of cryptocurrency information among participating countries to combat international tax evasion. That's not why it's there. That's not why it's there. According to the policy recommendations report published by the White House last July, implementing the CARF would help discourage U.S. taxpayers from moving their digital assets to offshore exchanges while preventing domestic platforms from being disadvantaged compared to international competitors. Adopting this international tax standard would put the United States in line with more than 1/3 of the world's countries. The rollout of the CARF is expected in 2027, with 50 nations prepared to join, including Brazil, Indonesia, Japan, Germany, France, Italy, Spain, of course, and Mexico, as well as the United Kingdom. Then there's another 23 countries that have reportedly committed to implementing the framework by 2028. In parallel with joining the CARF, the United States is preparing to introduce stricter tax rules at the national level beginning in January 2026. Form 1099-DA, which I presume stands for digital assets, will take effect, requiring U.S.-based exchanges to provide far more detailed transactional data, including both incoming and outgoing transfers. Clinton Donnelly, a tax attorney specializing in digital assets in the United States, stated in a post on X, quote, "Right now, the IRS doesn't have instant visibility into everything that you're doing on the blockchain. However, that's about to change. A few years down the road, with better tools and data integration, they'll be able to scan blockchain networks at scale to identify major non-reporters and target them for audits." You need to get your shit off the exchange. You need to sell everything that is not Bitcoin if it's a digital asset. I'm not saying, hey, go sell your home. I'm just saying, hey, if you own Solana, dude, it is time to get rid of it. Then sell it into Bitcoin. Then get all of your Bitcoin off of exchanges. I really like the guys at Square for enabling 4 million merchants that use the Square point of sale devices at their place of business so that I would be able to, buy, or not buy and sell Bitcoin, but buy and sell their goods, or, well, at least buy their goods with Bitcoin directly. But they're going to fall under the 1099 DA, possibly, even though they're not an exchange. It probably won't be a 1099. It will be another kind of reporting, because a 1099 is basically an income tax statement, but there will be something. And what we really, really need to do is lean into selling your goods and services directly for Bitcoin with wallets that you hold, wallet addresses that you've built to take Bitcoin in for goods and services that you sell. We need to lean into that. It's about time that the apathy stop. It's, well, Dave, I don't want to go to jail. Well, nobody wants to go to jail. Nobody in the at the time, the colonies, nobody in the British colonies in what became the United States, none of them wanted to die. Hell, I'll bet half of them that died in the Revolutionary War against King George would much rather have cooled their heels inside of a fucking jail cell than to have a hole blown through their torso and then die. But yet they did it. And you got to ask yourself, why? Because enough at one point literally becomes enough. They were much more able to get over that mountain of apathy that just locks people into their station, which governments and people in power use. They know apathy is a hard hill to climb. It's so much easier to just bask in, oh, well, it's for the roads. No, man, it ain't for the fucking roads. All these people do all day long is figure out new and improved ways to steal from you and make it look like they're not stealing from you. That's what they do. And it's never, I'm not sure if it's ever been worse. But then again, I wasn't alive 300 years ago, so I don't know what I wasn't alive in medieval Europe either, so I don't know what that shit looked like. But it seems to me, given the history that I do know, that humanity has basically just been filched, just fleeced of everything, everywhere, all the time. It's got to stop, y'all. One of these days, it's going to stop, and then we're going to be able to run the numbers. But before that, we'll run the numbers right here. CNBC futures and commodities. Merbon crude is up 0.06% to $65.08. Brent North Sea up 0.08%, and West Texas Intermediate is actually up. Wow, good gain, bro. Almost a full half point to $60.16. Meanwhile, the hedge that is natural gas is down 1.79% to $4.28, and gasoline is down another third to go to $1.98 a gallon. Yeah, good luck finding it. Shiny metal rock's not doing well, except for palladium, the only thing in the green, 0.12% to the upside. Gold still hanging on to $4,000, but just barely, $4,073 and 6 dimes. Platinum is down 0.05%, silver is down 1/4, and copper is down 1/2. Fully mix of ag futures today. Biggest winner looks to be coffee, 2.2% to the upside. Biggest loser, it's a tie between chocolate and sugar. Both are down 0.61% in the red. Live cattle is down 2/3 of a point. Lean hogs down. Pork prices are down basically 2.14%. McRibs on the way. Feeder cattle are also down by 1/3 of a point. The S&P is down 0.5. NASDAQ is down 0.8. Dow is down 0.89%. Only thing in the green is the S&P Mini. It's up 1/4 of 1%. And we're at $93,080. That is a $1.86 trillion market cap. We can only purchase 23.1 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,950,335 and one half of. And average fees per block are moderate, 0.03 BTC, taken in fees on a per block basis. There's about 35 blocks carrying 46,000 transactions waiting to clear at high priority rates of 3 sats per VByte. Low priorities get you in at 1 and still in zettahash territory. So 1.08 zettahashes per second. It's the hash rate of the network. That is all the security that we need and more. Perpetual shock. The boosts from yesterday's episode of Bitcoin, and I got BTC Master 399 sats says ABC Web Designs will work for sats. Yes, that's right. Websites for Satoshis. And Tulips, brother, he just hammered down 25,000 sats. Dude, Tulips, I love you, man. He says, Tulips, 25 years, 25,000 sats then. Congratulations. Get your wife some flowers or something. I love the current price action. I hope we can keep it like this for a few more years. A tulip can dream. Oh, a tulip can dream too. Because I like my sats like I like my women. Cheap and fungible. Oh, I don't know if I want a fungible woman. Hey, y'all, just exchange this woman for another woman. They're just the same. Yeah, I'd probably end up, crucified on a cross somewhere for that one. I wrote down all the market price predictions from the biggest Bitcoiners out there, from 150K to 1 million per coin. They were all wrong except for Odell and you, sir. Oh, okay, thank you. Stay humble and stack sats or something like that. You said it turned out to be right. Humbled I've been. All predictions, all trading, and all stocks and shit coins are just tulips, and they are going to zero. Tulips is one of my favorite people, man. Nick_dose, 104 sats says cheers. And Nakaz18 with 210 says congrats on your marriage. Live free and live aloha. I hear you, pal. I hear you. That's the weather report. Welcome to part 2 of the news that you can use. Let's go back down south to El Salvador, where Steak and Shake is planning an expansion. Alex Larry from Bitcoin News. Steak and Shake, the American fast food chain famous for its burgers and shakes, and recently its Bitcoin adoption, is expanding into El Salvador. It's a perfect place for them to go. This decision comes after the company embraced Bitcoin payments and saw a boost in sales across the United States. The company then announced its expansion after taking part in the Bitcoin Historico event, which was held in El Salvador. This event brings together well-known Bitcoin supporters and businesses. The company's leaders said that the visit helped confirm that El Salvador was the right place for their first Latin American location. Dan Edwards, the company's chief operations officer, explained the decision very clearly. He said, quote, El Salvador is a country that is innovating and leading the way, and we greatly respect what President Bukele is doing here. This is Bitcoin country, and we want our first restaurant in Latin America to be in El Salvador, end quote. Steak and Shake started accepting Bitcoin in U.S. restaurants May the 16th, 2025, and the company even introduced special items like the Bitcoin steak burger to promote the launch. This helped create excitement around new payment options. Since adding Bitcoin payments, the company has seen strong sales. Reports show an 11% increase in same-store sales in the second quarter and a 15% increase in the third. These increases were higher than those of major fast food competitors like McDonald's, Burger King, Taco Bell, and Starbucks. The company believes accepting Bitcoin helped attract more customers, especially those in the Bitcoin community. It stated that its embrace of BTC likely helped drive the uptake, while analysts say it's hard to prove this directly. The timing does suggest that Bitcoin payments did play an important role. Although Steak and Shake strongly supports Bitcoin, it briefly considered accepting Ethereum. Yeah, we know how that went. Steak and Shake is now working to make Bitcoin an important part of its identity. The company has even launched a Bitcoin reserve, choosing to store all of the Bitcoin that they've received from customers instead of converting it directly to US dollars. And we should pause there to reflect on that decision. I talked about it before on this show, but it's a good plan to think a little bit about that. They were converting all of their Bitcoin sales directly into dollars. And we said, okay, hell, at least you're taking Bitcoin. But now they're keeping the Bitcoin and they're not converting it to dollars. And this is a major American fast food chain. Thought that just needed its own little element right there. Anyway, where were we? Oh, Steak and Shake has also partnered with Fold, a Bitcoin rewards app, to give customers $5 in Bitcoin when they buy select Bitcoin meal items. These actions have strengthened the company's image in the Bitcoin community, and many people now see Steak and Shake as one of the most Bitcoin-friendly fast food chains in the United States. The expansion into El Salvador is more than just opening a new restaurant. It represents the company's goal of growing its presence in Latin America, and Bitcoin-friendly El Salvador seems like the best place to start. Edwards said, quote, "We are here to grow together. We want to enter Latin America, but we want our first flag to be planted in El Salvador." That's the end of the article. This is a company who understands the future. And I was talking about the future yesterday. The future is Latin America. The future is the continent of Africa. There's more places, Balkans and Baltics and stuff like that, but it's really Africa and Latin America. These are the two central places on the planet that have the potential for explosive growth in almost every aspect that you can think of. And Steak and Shake sees it. Because I'll bet you my hat that the store in El Salvador is not going to be their last restaurant that they open in Latin America. All right, on to Tether, who is also in El Salvador, by the way. Just let's be clear about that. However, this is not about Tether being in El Salvador. This is about Tether investing in Ledn, L-E-D-N, to expand Bitcoin-backed lending amid a surging demand. Well, I'm probably sure it's not surging right now, but, okay. Jamie Crawley, let's find out more out of CoinDesk. Tether has made a strategic investment in Ledn, one of the foremost providers of Bitcoin-backed consumer loans, in a move aimed at expanding access to credit secured by digital assets, the firm said in an emailed announcement on Tuesday. The size of the investment has not been disclosed. Tether declined to provide any further details when contacted by CoinDesk. The investment forms part of Tether's push to support real-world financial services built on digital asset rails. Bitcoin-backed lending allows users to access liquidity without selling BTC to unlock short-term capital. Ledn was one of the only survivors of the rout of the crypto-backed lending sector in 2022, which saw the likes of BlockFi, Voyager, Celsius, and Genesis collapse. The Cayman Islands registered company has streamlined its service, following a Bitcoin-only model to simplify its offering and sharpen its focus. Ledn, which had originated over $2.8 billion, that's billion with a B, dollars in BTC-backed loans since launch, is on track for its strongest year yet. More than $1 billion in loans have been issued in 2025, including $392 million in the third quarter alone, nearly matching the firm's entire 2024 volume. Tether CEO Paolo Ardoino said the investment reflects a commitment to financial empowerment through self-custodial credit. That is an interesting phrase, self-custodial credit, where you basically you basically provide your own credit. It's an interesting term, and I doubt you that this will be the last time that we hear about that. So Tether investing in Ledn is a really good sign. Like, you say what you will about Bitcoin loans. After the 2022 debacle of, and it wasn't just, I mean, honestly, all those lending companies that were talked about, it wasn't a Bitcoin lending company catastrophe. It was all linked to FTX and Alameda and that entire thing, right? Nobody escaped, but the people that really got hurt were the people that were holding loans with their Bitcoin. And we watched as the Bitcoin price just took a nosedive, much like what we're seeing today, except in those years, 2021, 2022, it was really bad. It was really, really bad. And a lot of people lost a lot of their Bitcoin because they got their collateral called because the price of Bitcoin fell below the value of the loan. And this is the problem with these lending companies. It's not that they're the problem. It's the problem is people don't understand what a loan is. Just because you make the loan and collateralize it with Bitcoin doesn't make it any less of an actual loan. If the collateral value of the loan that you've taken out with anybody falls below the loan amount, you're gonna get a call. This is the way this shit works. I've had that call before in a business that I started a long, long time ago that I had to shut down. I got that call from my banker saying, dude, the collateralized assets against the loan value, you're going to have to liquidate. It was a hard phone call to have. That's a tough phone call. But people started to go, well, it's just, I think BlockFi was a terrible company. I think it was terribly run, and I think they were predators. And I think a lot of the people that were basically, advertising, for them without thinking twice about it on podcasts and YouTube channels and whatnot like that, I think that they were complicit. Even if they didn't know what was going on at BlockFi, when everybody is screaming at you to stop advertising for BlockFi because there's something fucking clearly wrong, then maybe you should actually listen and stop advertising for a predatory company that went tits up the second that Bitcoin lost 10% to 20% of its price structure. I'm sorry, I can't let that one go. So many people got so hosed by BlockFi and the rest of these idiots that they, companies that were talked about in this news story, that it was just sad to watch. People losing hard-earned Bitcoin. They had held it for years and years and years, and they were like, okay, well, I don't want to sell it, but I can take a loan against it. And they were just led down a primrose path of, oh, it's going to be fine, it's going to be fine. And it wasn't fine. But now everybody's grown up. And everybody on the other end of my voice should understand. If you put up one Bitcoin for, let's say Bitcoin, let's just call it $100,000. I know it's below that. $100,000 is easy math. Ledden and people like Unchained Capital won't even think about giving you 75% of the value, like BlockFi was doing, or 85%, or 90%. You'll be lucky to get half the value. That's for your protection, as well as the company that's making the loan itself, right? That's for your protection. But still, it's always possible that could happen. And if you don't understand how this works, then you don't have any business whatsoever taking a loan against your Bitcoin. So if you ever think, I don't want to sell it, I want to get a loan for it, please do the math and take yourself through the mental exercise of what does it actually mean to take a loan against your Bitcoin, especially if shit goes south. Now, speaking about shit going south, Mt. Gox is back in the news. For whatever reason, somebody at that company woke up and decided, well, it's not a company anymore, it's really the trustee of the bankruptcy, but whoever woke up and decided that it'd be a real good idea, after 8 months of almost complete and utter silence, to move almost $1 billion worth of Bitcoin yesterday. Yeah, I'm telling you, man. Zoltan Varde is going to tell us even more from Cointelegraph. Defunct Japanese cryptocurrency exchange Mt. Gox has made its largest Bitcoin move in 8 months, even as it pushes back creditor repayments until late 2026. Then why did you move Bitcoin? Why did you move Bitcoin yesterday or today? When clearly any market signal is going to cause people to have heart attacks and shit the bed. What possible reasoning could you have to do anything at all if you've already said we're going to delay all of the rest of the payments, and they've made most of them already, but there are still some stragglers, and they decided because there's so many stragglers that haven't filed the paperwork that they're going to push these payments back for one more year. Then why move the Bitcoin? Why move the Bitcoin? Because the Mt. Gox labeled cold wallet that we're talking about here transferred 10,600 Bitcoin worth over $953 million into a brand new cryptocurrency wallet, marking its first large-scale transfer in 8 months. The transfer was also the first movement above $1 million from the address since March 25th, when a mere 893 BTC worth $77 million were moved, according to Arkham Intelligence. Mt. Gox still holds 34,689 Bitcoin worth about $3.14 billion at the time of writing. The transfer came as a surprise for the crypto community. Surprise! As the defunct crypto exchange delayed its repayments by another year until October 31st, 2026, citing incomplete creditor procedures. Quote, as it is desirable to make the repayments to such rehabilitation creditors to the extent reasonably practicable, the rehabilitation trustee, with the permission of the court, has changed the deadline, wrote Mt. Gox in an October 27th announcement. The delay means that around $4 billion in Bitcoin will be kept off the market for another year, reducing the risk of sudden sell-offs by Mt. Gox defunct creditors. Mt. Gox repayments have a diminishing impact on Bitcoin price as new institutional entrants, including Bitcoin treasury firms and U.S. spot Bitcoin exchange-traded funds, have been absorbing newly released supplies. And then they talk about Bitcoin's price. Then we'll go on and talk about this. Some industry watchers viewed the transfer as a concerning sign that Mt. Gox was looking to sell its holdings. Dude, you can't do that. That's not your holdings. You're holding it in trust for the creditors. That's the whole point of the bankruptcy at this point for Mt. Gox. And people automatically assumed, oh my God, Mt. Gox is going to sell. They can't. They have to give this shit back to the creditors. But this move potentially added more downside pressure to the crypto market correction. Quote, Mt. Gox has just moved over 900 million in Bitcoin, likely preparing to dump it on the market, wrote fucking idiot Jacob King, literally a financial analyst and CEO at Swan Desk, in a Tuesday X post. That is not only reprehensible, it's juvenile. Jacob King is juvenile. You know better. Continuing, however, the receiving wallet labeled 1ANKD has so far only held the 10,608 BTC that it received. It has not sent any coins to centralized exchanges, which would be a stronger sign that the sale is imminent. Mt. Gox was one of the world's dominant Bitcoin exchange, handling more than 70% of all Bitcoin trades at its peak in 2010. The Tokyo-based platform collapsed in 2014 after revealing it had lost 850,000 Bitcoin in a security breach, and it remains one of the largest hacks in crypto history. A years-long civil rehabilitation process has since attempted to recover and distribute all the coins. I want to get back up to this Jacob King business. Let's read the quote again. Mt. Gox has just moved over 900 million in Bitcoin, likely preparing to dump it on the market. Does Jacob King not understand how bankruptcy proceedings work? Especially when we've had very clear and detailed detailed outlines of what Mt. Gox has been doing for years. What their plan has been for years. Ladies and gentlemen, this kind of reporting is malfeasance. Jacob King has no business saying anything at all, not only because of his position, but because he clearly doesn't understand how bankruptcy works. When we have a rehabilitation plan that has essentially been told to us several times, that the plan for Mt. Gox is to redistribute the coins to the creditors directly as BTC. There were some sales early on, but at this point, everybody understands what the rehabilitation plan is. And all of a sudden, you think they're just going to, you know what? Screw that plan. Let's just sell it all in the open market. Dude, they got to go back to court. They got to jump through hoops. They got to file paperwork. They got to do all kinds of shit. And we would have heard about all of it before today. And this dipshit, Jacob King, decides on X, given his position and his amount of followers, to say that he thinks that a dump of Bitcoin on the market is imminent, even though he knows better. Unacceptable. Unacceptable. That's somebody who needs to be looked at very, very closely. And honestly, once you finish looking at his ass, you never listen to another word he says. He either is manipulating sentiment or he clearly doesn't understand how a basic procedure of bankruptcy works. And it's sad that people are falling for it. Meanwhile, Bitcoin accumulation amid market weakness, well, there is a sharp rise in 1,000 Bitcoin holders, and that suggests that, yeah, maybe is accumulation time. And this is from, who's writing it? Oh, James Van Stratton out of CoinDesk. I like James. Over the past week, the number of unique entities holding at least 1,000 BTC has climbed to 1,436, even as Bitcoin has tumbled and held firmly below $100,000. This marks a sharp reversal from the broader 2025 trend where OGs and long-term participants have been steady net sellers. For context, this cohort peaked above 1,500 entities in November of the year 2024 in the excitement and bull move following Donald Trump's election victory. It declined to about 1,300 in October. The last time a price rally was seen with a rise in large holder entities was January 2024, just ahead of the ETF launch in the United States, when the number rose from 1,380 to 1,512 entities holding 1,000 or more Bitcoin. Bitcoin ultimately topped out at around $70,000 a couple of months later. Further evidence supports this from the accumulation trend score by Glassnode, which breaks down wallet cohort behavior. This metric measures the relative strength of coin acquisition across different balance tiers based on entity size and the volume of coins accumulated over the past 15 days. A reading near the number 1 indicates accumulation, while a reading near 0 indicates distribution. Entities such as exchanges and miners are excluded. For the first time since August, whales holding more than 10,000 Bitcoin are no longer heavy sellers, with their score now around 0.5. So that means that they're accumulating as much as they're actually distributing. Entities holding between 1,000 and 10,000 BTC are now showing modest accumulation. The strongest accumulation? Well, that comes from holders with between 100 and 1,000 BTC and from wallets holding less than 1 Bitcoin. The data suggests growing conviction from both small and large entities that Bitcoin is undervalued at these current levels. So there's at least your little ray of sunshine. Sure, I can be accused of belching out a little bit of hopium, but it is math. There does seem to be some accumulation occurring right now. And that's always good news. We like to see people buy and hold Bitcoin. The only question is will they hold it? Well, only time will tell. All right, that's it for the news that you can use. Your host has been me, David Bennett of the Bitcoin End podcast, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.